Luka, I could start by asking you a question. Why particularly was this panel important for you to be on? Why did you want to represent this topic? It's underrepresented here at the event for good reason. It's still, quite a way off, isn't it? But, what piqued your interest to be on this panel?
As I mentioned, there's quite a bit of fear present, not only, or maybe even more between payments industry than the merchants themselves. I want to kind of explore and explain that those fears sometimes are not necessary. So I think this panel is a good opportunity for us to share different opinions, whether, digital currencies, CBDCs, or crypto, or whatever, will be able to replace that in a way that it's safe, useful, private, or public, however you want to do it. And for us, it's important for us to spread the idea and just saying this is not a boogeyman, and it's here to stay. It's a fact. We just had a call yesterday, a panel with ECB, and it was said that yes, today's usage of that kind of currencies are still, small, as you could see from the numbers. But the Gen Z generation, on the other hand, this is something that they grew up with. This is something that they will be using. So we need to get used to it.
Yeah, we'll all be using at some point. So how about we go along the line? Obviously, Luka, you've spoken, and just ask the same question. Firstly, Jerome, you've introduced yourself. So what was it about this panel that really sort of whetted your appetite?
I think we are at the beginning. You talked about crypto and stable coins. I talked about CBDC, and I think there is clearly these three approaches to digital currency, what I like to call the currency with no authority. There is Bitcoin, nobody controls Bitcoin, but it's a true cryptocurrency, totally out of control, totally free, no rules. Then you have a stable coin, which is private money. It's companies who create them. I think a very important experiment was the one from Facebook, Libra Diem, which was a major endeavor. And then you have stable coins, which is the normal way, the traditional way to do it, where you have a central bank issuing a currency. I mentioned in my presentation the politics, and I believe the politics are important. And I've lived for many years in the US, and in the US there is a real democratic debate, not on everything, unfortunately, but on on stable coins versus CBDC, and typically the Democrats are very much leaning towards CBDC, the Republicans to stablecoin. I think it's good because it is a political debate.
It is. Now let me go to you, Andrew. Perhaps introduce yourself. And you said you came to this show specifically for this panel, didn't you?
I certainly did. I'm Andrew. I'm from the People's SCE, which is a decentralized member-owned cooperative society based in Luxembourg, which allows its members to be, which every member is equal, and its members operate the ecosystem, which operates a fully decentralized merchant community, which connects merchants to their consumers and vice versa in European areas, which will roll out around the world. So it's kind of the opposite to the CBDC in the respect that we are decentralizing everything to empower merchants and their consumers, and particularly small businesses and small business communities, away from a centralized system. So, of course, this particular subject is very important because over the last year or so, the debate about getting towards central bank digital currencies by large central banks, European Central Bank, the Federal Reserve in the United States. China already had the Bank of China already been developing theirs for many years now. They were one of the first. It is in my opinion, the focus on discussing central bank digital currencies and why they should exist is redundant because we already have cashless societies. In Sweden, for example, it is very rare that you would find paper anything, let alone paper cash. Everything is electronic. In Estonia, the most advanced digital society in the world, even driving licenses are electronic. Everything is electronic and all payments are contactless. Even in the United Kingdom, there are I don't remember the last time I saw anybody in the UK using cash. Everybody uses a contactless payment system. So already, even though there is fiat currency in its existing format, there is you have to wonder, why are the central banks now starting to go down the route of exploring central bank digital currencies and having some form of digital issuer rather than a physical issuer for the currencies? And the reason for that is quite simple. It is the opposite of to empower merchants and small businesses and individual consumers and people who just want to go about their life. The purpose of it is to exercise more centralization and more control over the population. And to the extent where if you don't behave according to how the government wants you to behave, they can coerce you by turning off your access to your own capital. And we've already seen this last year when in Canada, which is up until recently been regarded as one of the most democratic societies in the world, and it has attracted people from all over the world to go and live there because of the opportunities in democracy and the enviable lifestyle. We saw the government of Canada decide to extend very much draconian restrictions over its population to the extent where logistics industry went on strike, and the logistics industry blocked up the roads and wouldn't back down. And at that point, the Canadian government said, if you don't back down, we will seize your bank accounts. So it is already on the list of the central infrastructure, the central ecosystem, to actually use a digitalized system to be able to ensure compliance among the population and the business community. And of course, that level of compliance doesn't mean compliance with rule of law and being a good citizen. It means compliance with whatever rule is now the latest thing that you have to adhere to. And they will use private capital to be able to exercise that over people. I mean, for example, if you and I want to go to a shop and somebody says you can't, you will go anyway, because really in a democratic society, there's not much anybody can do about it. But if they tell you, if you go to that shop, we will turn off your access to, you can't feed yourself, then you might think twice. So in fact, this CBDC direction is quite the opposite of modernizing the payment system, modernizing the way merchants interact with their consumers, and modernizing the way citizens of developed economic societies operate on a daily basis. It is really quite a retrograde step back towards undemocratic principle within the fight being exercised by central banks. And the real only way if we want to go forward and move forward and develop and innovate ourselves, what we should be doing is either advancing the status quo with the contactless systems and the way that compliance works to ensure cross-border activities are better, or fully decentralizing the entire ecosystem, which is what cryptocurrency was designed for in the first place. It was designed on its blockchain technology to be publicly verified and validated by members of the public, to be decentralized and not issued by any central authority, and even to be used as a unit of currency rather than a speculative investment vehicle, so that everybody in the average people in the street can go around doing their everyday life without the centralized policy or being subject to monetary policies or inflation or mistakes that banks make or government overreach and things like that. So it's a way of democratizing and sustaining the society for average people and small businesses. That is the way forward.
Agree? Disagree? We've got Slido here, hashtag MPE 2023. There's a real smorgasbord of people on this panel. In fact, going to now to Daniel, who has a big job at hand and a different view. So Daniel, perhaps introduce yourself, why you came on this panel, and maybe tell us a little bit about what the ECB sees as a CBDC.
Thanks, Angela. Indeed, and I'm from the evil ECB, it appears. Indeed, from the point of view of a CBDC, which we call the digital euro, we believed it was very important as cash declines in society that there was a digital alternative to cash, that consumers be able to pay digitally in the future with an asset of the central bank and that security. And we believe that this is necessary and the next evolution of our currency. So we don't think it's a mechanism of control or coercion to that extent, but we do believe it's a way forward in a digital society. And not only that, we know... Oh. Sorry, it's my tick.
No, you still sound Irish.
Thanks. Thanks, Dave.
You're back. You're on.
I'm back. Thank you. Apologies for shouting. Indeed. So for the digital euro as well, we have other concerns to bring society along with us. If you look in the Yore area, 98.5% of people hold a bank account, which means we have a lot of financial inclusion in the Yore area. However, 40% of those people are not digitally native, that do not like to use that account online. So we have to make sure when we move forward into the digital age, we bring those people as well with us. And that is a key component of the digital euro as well. It's not just about facilitating the financially literate to make sure that the tech savvy have access to digital payments, digital currency. It's to make sure everybody does. And in addition, the people who do not want to use a digital euro, they can use cash. Cash will exist. This will not be forced on society. It is an option for people in the future to use. So we're at the initial phases of the project now. We're thinking about it. We're engaging with the market. We have numerous stakeholder groups that we do our engagement with. We will come back with design decisions, but it will not be the decision for the European Central Bank. This is a decision for the democratically elected people and, in Europe, in the Commission, the Parliament and the Council. They will make the call via legislative process that's democratic to see what the next iteration of the euro currency will be. Will it be a digital euro or not? When we will launch it, what will that look like? How can we get into the hands of the people? And when we do get it into the hands of the people, we have to make sure it is as efficient as possible, that it is low cost, and that people want and can use it, and merchants can accept it.
So it's not as easy, is it, as just launching a cryptocurrency? There's a hell of a lot of design that needs to take place before we're at a stage where we'll be able to do this.
Indeed, we don't have the niceness of being a startup where you can go fast and break things. We have to include everybody. So we have to go forward and make sure that we include everybody in the journey, that everybody has to say, and that we can design the next, and it's the next version of our currency as we classify the monetary anchor, you know, the iteration of cash in the digital world that can facilitate the euro. So, and we have to make sure that that's done correctly.
Thank you. Dave, you've written about this topic.
Why am I on the panel?
Why are you on the panel?
Oh, because I wrote a book about it.
Exactly, I was with you.
I can't think of any other way to sell it.
So tell us a bit about what you've written on this topic.
It's called The Currency Cold War, and it's available at all good bookshops, and actually, hopefully, some of the terrible ones as well. So please do.
And on Amazon?
No, look, I mean, because people talk such rubbish about CBDC, and I just think it's such an important topic that I think all aspects of it need to be covered. So that's why I agreed to be here.
Okay, maybe you could answer one of our questions. Pick one, whichever one you would like.
Isn't the actual money we use today already digital?
Yeah.
No, it isn't. So it's digitized, which is very different. So the difference between, let's start, you know, nothing to do with crypto. Digital currency's got nothing to do with crypto, so let's put that to one side. So right now, the electronic money that we use is money that's stored in bank accounts and moves from one bank account to another. Cash doesn't live in bank accounts, it lives in my pocket, and, well, that's because I don't actually have any cash, but, you know, or in the drawer in the kitchen, or in the little box next to the door for giving to the pizza guy. So there's money that lives in bank accounts, and that's not going to change. Electronic money isn't going to change at all. But electronic cash doesn't live in bank accounts. It lives in devices. It lives in phones or USB keys or cars or whatever, and it goes from device to device, as Jerome was saying earlier on. So in the future, those two things will run in parallel. We're still going to have digitized money, which is the money that lives in bank accounts and moves around, but we're also going to have digital money, which goes from device to device. So they're two separate things. So is the actual money we use today already digital? Yeah, not really. It's digitized, which is a bit different.
I think this is the
important... See, I told you I was a horrible nerd about this sort of thing. You don't want me on these kind of panels.
Well, we all need to learn more, and I think it's actually listening to the different points of view here that, you know, one thing that I see as an issue, and we actually discussed it earlier, is as an industry, you know, there's a lot we still don't know. And also that's because we're in uncharted territories. We're still at the beginning of the journey. Say, for example, with CBDCs, we know that 80% of central banks are considering launching them. Some are further advanced than others. And some are smaller countries where it's easier have been able to do it. Barbados, Ecuador, small regions with small populations. Daniel, what are you doing? And also, what do you see as the potential?
Yeah, indeed. I suppose the Yore system, the ECB, which is a collection of 19, 20 now, Yore area central banks, with the ECB leading that initiative, is developing a digital euro project, which for the last year and a half, we are looking at the whole aspects of a digital euro, how it can be designed, what should be the economics behind it, financial stability risks, etc., and that we will make a decision in September, October this year, should we move to the next phase of the project? Should we continue this initiative and say, okay, how it can all come together? How can merchant acceptance, what should it look like, how the app should work, offline components, etc. And all of that will need to be worked on. But in addition, we have the parallel track, and that's the track with the European Commission, Parliament and Council, who need to embed this in legislation. So to create the democratic aspect of the currency. So we can provide the raw materials for the legislators and the politicians to say, okay, now, yeah, go ahead.
You guys keep talking about like the democratic aspect of all of this. I could walk out into the street right now, and I doubt that one person in 100 in the street could actually tell me what a CBDC is and how it's going to work.
We're only starting to.
I know, but that's why. But the point is, this is why I'm saying nobody knows how CBDC is going to work for precisely the reason you've outlined, which is it has to be shaped by the body politic, not by technologists like me. And the body politic is not in a position to say how it should work. They haven't got a clue. And it's going to take, in my opinion, you're talking about a 3 to 5 year horizon to get civil society educated to the point where it can actually make that input.
Yes, you're right, David. And what will happen at that point is when they get to the point where there's enough understanding of it by the general public everywhere in more where you get these CBDCs issued, we'll find that it will drive more citizens away from centralized currencies and into the decentralized world, because they will see it as a slight on their freedom and privacy, and they will worry about overreach by the centralized system. So they will start to look towards decentralized organizations, and not just the decentralized tokens and currencies, but also decentralized organizations that operate them. Not, for example, putting your cryptocurrency on exchanges like FTX, which are owned by centralized corporations, owned by shareholders, which can make bad decisions and collapse, as we've just seen. But people-orientated societies which are creating their own ecosystem, because of course...
But where is your evidence that if you get everybody involved, they can make the correct decision? People don't know what they're talking about.
No, absolutely, no, they shouldn't be. No, that's exactly my point.
If you let everybody vote, it's compulsory asparagus for breakfast.
No, that's the point, is that not really.
It's very popular in Germany.
Not really, because if you have, that's the problem with all. What's the problem with going towards CBDCs is that it gives exactly that problem. It gives a panel of people who are put into a position of authority complete control and power to exercise over the financial economy of the everyday people. Whereas if you decentralize it, then nobody has that ultimate control and decision-making opportunities. You have the community validating using validator nodes, generating themselves.
How many people in the world set the price of Bitcoin right now? There are about 6 people that move the volume.
That's right.
There's about 6 people that move the volumes that set the price of Bitcoin. This idea that decentralized is good, this is fictional. It's not. This is completely made up.
Absolutely not.
You haven't got any evidence to support the idea that putting people in charge of things is a good idea.
Yes, but you don't...
Exhibit 1, Brexit.
You don't put people in charge of things. Yes, that I agree with you. But that you don't put people in charge of it. What you do is you have a distributed blockchain ledger system, which is fully... it's not it's tamper-proof.
But that is putting people in charge. That's the point of a decentralized... You're letting people buy tokens in order to vote in the governance of the DAO.
Yes. Right. Let me bring in some of our other panelists.
The alternative is to be controlled by the state and the central bank.
But the point is, you vote for the state now.
No, you don't have any say.
Putting people in charge of things is not the same thing as having a functioning democracy.
Right, Jerome. So I'm going to pivot here. I've had enough of this. I think you should have this offline.
In the car park.
Tell me a little bit about the latest developments and design considerations in terms of digital currency, and where you see they're going, because there's a lot. We said there's a lot to be done. So what do you think?
It's interesting because we see, again, I mentioned the three and we discussed, maybe didn't discuss that much about stable coins, but crypto and CBDC, and then you have stable coins. And what we see is that with time, some go up, some go down. For example, last year, Bitcoin was almost dead. Everything was going down. This year it's booming again. CBDC are more stable because it's government central bank driven, so it's a smoother course. Stable coins, there were some important attacks recently. Attacks are depeg, meaning they lose their value. Some terrible, like Terra, some smaller, which eventually didn't lose their peg, like Tether or USDC. So when you read the news, some go up, some go down, some are trendy, some are not trendy. But at the end of the day, everything progresses. What we see is that cryptocurrency today is not used for payments. Nobody uses them for payments. So I'm sure you will change that. But still today, there is a success of Bitcoin on speculation. Some people buy Bitcoin to become rich, but they don't necessarily want to pay with Bitcoin. I'm a big Bitcoin believer. I will become rich with my Bitcoin. I certainly don't want to pay my grocery with my precious Bitcoin, but I keep in my vault, in my digital vault. So we see this happening, no payment today in cryptocurrency, and it was designed to be a money, to be a payment mean. Stable coins are more interesting because they power decentralized finance, as I mentioned, and decentralized finance is really interesting. There is really something to do about that. It's some new models. I was talking about programmable money, but I think we are just at the beginning. And unfortunately, I cannot tell you programmable money, what kind of programs. I gave an example, but what kind of programs will be there? And if I can take one example, the day the iPhone was introduced, you remember that day, Steve Jobs showing the iPhone. What did we think? Oh, nice phone with a large screen, and it will be great to see your photos. The guy that very day who could tell, whoa, taxis are dead, because iPhone means Uber, and Uber means everywhere in the world, not good for taxis. The guy who would have imagined that day the potential was smart. Today we have programmable money. What will...
Stop talking about programmable money. Madame Lagarde said clearly there isn't going to be any programmable money. I'm not one to disagree with Madame Lagarde, and nor is David. So stop talking about programmable money.
Yeah, and I think...
Where, Mars? It's not happening in Europe.
Not with the euro, not for now.
Right, good.
And for good reasons. I mean, the pitch of the ECB, they have a point on monetary policy. Personally, I think, because if they don't do it, if you don't do it, how will DeFi happen with private money? I won't be able to use my digital euro on DeFi, so I will use maybe the EuroC, the stable coin from Circle, which and I think it was a true coincidence, was launched the very day when MiCA was approved. There was the Trilog approval. So, sometimes there are some funny things, and I think it tells something. If I cannot use my digital euro on DeFi, somebody will fill in the void.
And yes, you're right. And actually, there's an interesting thing about MiCA regulations coming in very soon, which is very good for the European market. And I can see that somebody here has asked a question about that. Do digital money equals real money? So therefore, how is it possible to manage old-fashioned people who perhaps aren't digitally orientated? Do we think that the processes will replace 100% of cash? Yes, is the answer to that, because if you go to, there are two examples, extreme examples really. One of them is China, which I've done a lot of work in China over the years, used to have an office there, and I had a Beian internet license, Chinese internet license. And what I learned was that in China, there are 940 million users of smartphones, not just smartphones, actual accounts, users. And what they did was just basically force every member of society onto the WeChat system and the Alipay system and all the integrated system with the Baidu internet search engine has all been used for every area of society. So you have everybody from children to elderly people using a smartphone. There are no laptops, but everything is smartphone oriented, and they've done that in a very, very short space of time. And how they did it was basically by saying, if you don't get onto the system, you'll have no access to anything. So it made everybody familiarize themselves with using the digital smartphone technology to run every aspect of their life and business. And that has happened very, very quickly. And that was done by pretty much explaining that if you have a certain time to do it. And there are 940 million users. That's pretty much everyone who is over the age, who is old enough to be literate. Is using that. And if you go around, if you take a train journey around rural China, you will see people of all ages and walks of life doing everything on their smartphone, and everything is digital.
If old Chinese people can use it, then old Europeans can use it,
everybody
right?
will. So it's a question of having to.
No problem.
Exactly. It's if you have to, you will have no choice. And then the reason that it hasn't, that you're saying there's old-fashioned people exist, is because they haven't been forced onto a system, because you don't live in a country where the government chooses your path. But it will get increasingly like that the more the CBDC overreach comes in and the more they start to put people onto platforms like that. So the other extreme example, which is completely the opposite of the Chinese system, is El Salvador in Central America. And about 2 years ago, the Salvadorian government made it Bitcoin a legal tender in El Salvador.
No. They made Bitcoin a compulsory tender.
Yes, they did.
There was nothing liberal about that at all.
Compulsory tender.
El Presidente said you have to take Bitcoin,
yes,
not you can take Bitcoin.
Okay.
He said you have to take Bitcoin. It's not.
Hold on. So Euro,
just a minute. This is important.
You have to accept Euro. It's a legal tender.
Nobody has to accept euros.
You have to.
There is no legal tender except
in El Salvador.
You have to take
in El Salvador and France.
You can pay.
Maybe I can actually
in El Salvador.
factualize this argument. Legal tender in Europe is a difficult concept because it changes from country to country.
Correct.
So it depends on the country you're in. So there's no harmonized view of a legal tender. In most jurisdictions, it's freedom of contract. So you can contract for the payment method you want to use. Exactly. Some countries go a bit further than that, saying, I think Germany could be one, that you have to accept physical notes and coins. Hence, you have a 500 euro note in Germany, 200 euro notes in Germany, 100 euro notes in Germany. That is not the case all over Europe. As in Europe, if you can do it in Europe, you can do it anywhere. We are unhomogenized in this area, and that's actually very good because we have numerous opinions everywhere, but usually the end product that we get to is correct, usually. Which is great, because Europe is fantastic this way. I think the digital euro, I think, will also
That's true.
will also go this way.
So actually, I want to ask Luka a question now, because it was something we were talking about earlier as well. So the best application that I've seen of stablecoin and linked to the dollar was by the UN, and they used it to get Behance. They used it to get money into the front line in Ukraine. So there is, real world, fantastic examples of stablecoin being used. Where do you think there should be more private and public, or where have you seen, or do you think that opportunities and challenges?
Again, I come back to my statement where I say there should be an option to do whichever. So either you want to use euro as in cash, or digital euro, or crypto for that matter. So yes, exactly. Ukraine was at first it was a great case of how you can help without having the banking system up and running due to the start of the war. On the other hand, the problem, for example, in crypto is you needed internet and electricity to access that money. So there's still some downsides to it on how to use it and when. But at first, it really did help. Nowadays, they're making some trouble in Ukraine regarding using that crypto and all of that stuff. But this is a great case to do so. On the other hand, there's also just easy money transfers. So we're looking at Europe, but there are parts of the world where money remittance is really important, right? Cash flows from North America to South America, cash flows from Europe to Africa, or from Europe to Turkey, where people are losing a lot of value for paying that money remittance because it's complicated and expensive. With crypto, USDT, simple as that. Just send a stable coin value within a few seconds for preferably a small amount of money depending on the blockchain that is being used. But these are some great cases that can be used, and it's useful for the society.
And it's 70% inflation in Turkey. So every time a supplier sends something, or has a huge tourist industry, sends some euros or other currencies there, the Turkish recipient loses by 70%. So this the way of having a unified unified decentralized cryptocurrency across there actually helps those people stabilize themselves against this terrible inflation.
Yeah, exactly. I mean, they could be sending gold bars, but that doesn't make sense, is
Yes.
it?
Would you send Bitcoin to Ukraine? Did anybody here send Bitcoin to Ukraine? I'm just curious if that's a real example.
It was linked to the dollar.
Or USDC.
Yeah, did we?
That's Ethereum tokens. The point is, if you sent crypto to Ukraine, there is now an immutable public record that you did that, which Mr. Putin and his friends will be only too happy to examine at their leisure. So the idea that just doing this is a great idea, you're so wrong. The way this all works, we're at the earliest stages of this.
Yeah.
Civil society does not yet know how this should work. You say to Jerome, tell us about the design. How can you say about the design of something when we don't know what any of the requirements are yet?
Yeah.
I think we have a long road to go down to educate the public and the institutions to the point at which they can make the real input that we need in order to construct the central bank digital currency the society wants. Not what technologists want, not what a few crypto whales want, not what some money launderers want, but what society wants. And we're a long way from getting to that.
Well,
I agree with you, Dave, here. I think, but we should learn by trying, because if we were just going to sit in panels and discuss how it should be and this is what ECB needs to do because it needs to fit all purposes. But I believe that we should give it a try. Try USDT, try Bitcoin, try digital currency. Just try, and then society will vote by either using it or not. And if they're not going to be using it, it's a bad solution. If they are, it could be a good solution.
But if society votes, let me give you an example. A quarter of people in the UK think that Sherlock Holmes was a real person.
He wasn't.
So do you think they should really be voting on the... What proportion...
Vote by vote, but by
I'm asking you a serious question.
Yeah.
What proportion of people in America think that the sun goes around the earth? Do you think those people should be choosing the future direction of the economy?
It's choosing by using.
It's
right?
easy to say people should choose, but
that's the problem.
That's wrong.
You can extend that to even centralized government officials who are similarly, some of those people are making policy decisions.
Mr. DeSantis has already banned CBDC in Florida.
Then it's democracy. I mean, would you leave people to vote for your leaders and then you get Trump and people like that? So
I'm not saying you should let everybody vote.
We should be getting away from that.
Can I just step in? Does anyone want to hear more? We've run out of time.
Oh, sorry.
Hands up if you want to hear more. They all want to hear more. But Daniel, you have a train to catch. So Daniel's leaving us because he's got to get the train to Frankfurt. So, but we will stay on for another 5 minutes or so and finish off the conversation.
Thank you, Dan.
So thank you for joining us, Daniel.
Thank you, Daniel.
Pleasure, guys.
Thank you. Right, so I'm going to go along, and we just want final hard-hitting remarks.
Okay.
We want them for the merchant payment ecosystem. So we have merchants in the room, I'm guessing, and we have the merchant payment ecosystem in the room. Plus, what's your final closing remarks to our audience? What do they need to be doing now? It seems maybe nothing yet. It seems we're not there yet, but what's your advice?
Yes, totally true. We mentioned the choice more on the consumer side, and consumers will have a choice. And personally, what I like with these debates, you can see how heated it goes. And it's interesting. Especially in payment, we are not that much used to EMV should be that way. EMV is more, it was a lot more calm.
I don't know. There were some discussions about SCA a couple of years ago, which ended up in the car park.
When you will get leaflets in your mailbox, in your personal mailbox, telling that EMV should, okay. So you see this heated debate, very, very political. Just to give you an idea, when I started working on cryptocurrency, on the cryptocurrency. Now that the ECB is not in the room, I can mention that I'm also working on crypto. Something very unusual happened. I started to be followed on social media by far-right, far extreme left groups.
Really?
No, not typically the kind of people who follow me usually, and it tells something. So there is a very strong political belief around that. I think some people go, as you could see, I'm more moderate. And for example, some proponents of Bitcoin will tell, okay, there should be absolutely no AML. It should be totally free. And so, okay, you allow money to be transferred to criminals, pedophilia, all that. Is it reasonable? So this is on the consumer side. So they will, for the conclusion, for the merchants, for the merchant community, I think they will have choice too, and they will compare the different options. What does it bring to me? Maybe lower fees, and I know that for merchants, it's always something nice to hear.
Sure.
Maybe more flexibility or more friction. So this is what they will need to agree upon. And too early today for sure. Some will want to experiment. Today it's more a posture. When you accept Bitcoin, it sells something, maybe it brings you a customer, but it's not really economical yet. It's more on the communication. So yes, it's still very early.
Thank you. Luka, 90 seconds, no more.
Yep. So I still believe people should have choice. Merchants should have a choice. In Slovenia today, 55% of payments are done in cash. In Germany, it's more than 60% of transactions, payments are made in cash. That means that people want to use it, and it's fine. That's why the merchants and the industry itself, as the payment industry, need to accept what the people, what the merchants, what the industry wants to use. And my message here is just, let's keep the options open for the trade, the commerce to happen. And if that's crypto, if that's digital currency, if that's cash, let it be, and we have to endorse that.
We come back every year and we talk about where we're at. That's what I think. Andrew.
So to go back to this is really the crux of it now, is that I explained how they got people in China. That's really important. I'll come back to that. El Salvador, 70% of people had no bank account, weren't able to participate in any form of economy or financial system whatsoever. Okay, it was mismanaged how it was done, but bringing in Bitcoin got people suddenly who would have been in an agrarian situation into the modern world. So that is a very early stage example of giving people freedom. So what do merchants and what do small to medium-sized businesses and customers want? They want to be left alone to reliably go about their business without something suddenly changing that affects them adversely. For example, a monetary policy or an interest rate hike or an inflation problem or a government policy that is not favorable, or having to try to compete with large corporations on the same terms as the merchant services providers in the central system. All of those aspects are concerns right now of small businesses who have really had a tough time over the last 3 years with all the different policy changes that have affected them adversely and have not been on their side. So what we can say is that by going down a route where we, the people, build our destiny and our future, rather than rely on outsourcing that to authorities who don't have the same interests as you and are not aligned with the public or the small businessmen, that should be the way forward that we go. That is the genuine evolution of technology for the benefit of moving moving business and everyday life forward.
Thank you, lovely. We're storming at the minute. When are we going to be norming and then performing in this sector? Final words to you.
I think if I was a merchant, I would accept CBDC at the earliest opportunity.
Yeah.
I would but for the simple reason, when I go and pay Carrefour with digital currency, the money goes from my wallet to Carrefour's wallet. There's nobody in the middle. So if and merchants, by and large, it's a sweeping generalization, are a bit fed up with paying merchant acquiring fees so that issuers can give people like me air miles. You know, the merchants would rather accept CBDC and give out their own loyalty points and discounts and programs. So I would have thought, from a merchant point of view, they should be engaging with the European Central Bank now and pushing the agenda forward.
We should all be all over it because, yes, it's far away, but we want to be ready for when it is.
It's got to be right. It's a
Yeah.
once in a generation change.
Well, what a panel. I wasn't expecting that, but I very much enjoyed it. So thank you so much, everybody. And of course, this fantastic panel we've got will be at the back for questions.